Hello guys, it's Randall with BitRaged. So I want to do a couple of videos here on trading, on understanding charts, and I'm going to be using Coinigy. I really like this platform. I feel like it's very intuitive. I feel like it does a really good job of sharing the information in an easy to understand way. Very visual, very good options. I just really like it. Honestly, there's not a lot of options. There's TradingView, but most of the other ones are really outdated. So I really like this one. And this is what I use all the time. So basically what we're going to do first, when we look at the chart here, the first thing we're going to do is go to indicators and turn on relative strength index. I have it already on, but it's not going to be on for you automatically. You're going to want that on, and we're going to explain that in a little bit here. So basically in this video I want to go over quickly kind of overview how to understand the chart, what it's doing, make some basic predictions, understand when to buy and sell. I want to explain RSI, the relative strength index, and what that actually means, and how to leverage this for better trading, and most specifically position trading. I'm going to get into a little bit of divergence here, but I will do another video shortly on bullish and bearish divergence and exactly what that means, and hopefully quite a few visual representations of it. Before we get into the chart, I do want to explain two things. First of all, when you're dealing with position trading, you have to understand, or any kind of trading really, that there is a lot of factors that go into a price. And news, tech release, anything of that nature is going to affect price. So if you see a sudden plunge that doesn't fit with a prediction from the chart, there may be something you don't know. There may be something going on in the news, something that happened that might be affecting this more than just a natural dip. Because natural dips are natural. Alright? You see a chart like this is a natural chart. It's a good chart. This is a pump and dump. This is the kind of chart you want to avoid. You do not want to trade this chart. Now, if you like pump and dumps and you've made a couple dollars on them, that's cool. If that's what you want to do, you're welcome to do it. Understand that unless you're part of the group who is pumping, you don't know when they're dumping. So it's a very risky thing. And a lot of times these will get pumped and dumped for a while and then they'll just die. Right now it has 300,000 volume, which means it can be easily manipulated. But what happens when that drops off and you're stuck with a bunch of worthless coins? So that's a chart you do not want to trade. That's a terrible chart. This is a good chart. Ethereum's an even better chart. Ethereum's really good because it has a good mixture of people who love Ethereum and people who hate it. So they work against each other, and it works perfectly because whenever the chart will dip quite a bit, it's always going to come back up because you always have people who are stubborn and believe in it. And so you always have that push and pull, which makes for a very healthy chart. It makes for a very, probably Ethereum's one of the best things to trade as far as crypto goes, if you're doing position trading. Okay, so with that all out of the way, let's talk a little bit about the chart, what's going on here. I'm not going to get into depth on candles or explaining any of this. Hopefully you understand what a candle is. If you don't, Google has a lot of information on it. Do some Googling. There's quite a few YouTube videos. If you want me to explain candles, I can do a short video on that. Just comment below and let me know you want to see it. But the simplest version is when you see green, it's going up. When you see red, it's going down. Or it did go down. This is in the past. That's the simplest version, but I would encourage you, if you don't understand candles, definitely look into it because it does help you understand the chart a lot better. So a couple things. So we see this chart and we see a lot of dips, and then it goes back up and it dips and it goes back up and it dips and it goes back up and it dips. That's a healthy chart. But how do you know when it's going to dip and how far it's going to dip? It's a good question, and we're going to get into that. So let's talk about RSI. I told you we were going to do that and we got sidetracked. So RSI is the relative strength index, and it basically tells us whether what we're seeing on the chart is consistent with normal. So basically you have a value between 0 and 100 representing a percentage. So 100 is the top of RSI, 0 is the bottom, and it's a percentage of relative strength. It's a percentage of strength based on where the price is at any given time. So right now it's set at 70 and 30% to be the outsides. And basically what that means is above 70% is what's considered overbought. So when the relative strength chart starts to creep up into overbought, it basically means that the chances of it turning the other way are very strong. So overbought means it's probably higher than it should be, and there's a good chance it's going to take a dip. Anytime you see it go into this, there's a very good chance it's going to take a dip. It doesn't have to, but the higher it gets up, I mean the percentage of chance goes up. The same thing is true of 30% and below. That means oversold, and that's the inverse, which means when you creep down in here, it's basically saying that there's a very good chance it should be heading in the other direction up. So it's probably hit a good point in where its low should be. Now if you look at this chart where I'm pointing, and that was the indication, but it did drop farther than that, didn't it? Now that is possible for that to just happen, but you also have to understand that there's a couple things that happened recently for the January 17th crash, where Bitcoin dropped under $10,000. First of all, you had the Asian markets issue with regulations and all that, and that scared a lot of people, and a lot of people sold out. The second thing you have is a market adjustment, which Bitcoin has needed, which is a good thing. It will mean that when Bitcoin goes back up, it will be stronger. And the third thing is that the Bitcoin futures actually predicted this and in a way caused this crash. So they had an impact on it. So Bitcoin futures had an impact here. So this wasn't exactly a natural just chart. This part of it actually was not so natural. But irregardless, that doesn't matter right now. A couple other things to look at. So we talked about RSI and what that means. So when you're dealing with RSI, when it's in this area, it's considered safer. But when it's outside bounds, it gives us the indication it's either above its strength or below its strength. Meaning if it's below its strength, the price should increase. And if it's above its strength, the price should decrease. Again, that doesn't always happen. It's an indicator. Indicators can be wrong. Another thing that's very important is these bars down here. So obviously they tell us the bought and the sold, the red and the green, but they also tell us volume. So the higher this is, the greater the volume. So whenever you see a dip and you see a large volume of cash coming in, it should tell you that most likely this dip is not going to last. Now, you see a large volume, it drops down to, let's see here, 1119, so 11,191 approximately, and then it goes up to 12,539. It looks like a small dip and a small increase, but we're dealing in thousands of dollars here. So you could have bought in here, seeing this large amount of cash coming in. You could have made some money. You can make money on all these dips actually, but so you could have made money on that dip. So it dips again, it drops down to here, and again you see a large amount of cash coming in. So it drops down to 10,138, and then it goes up to 11,780. So it doesn't last a long time, and then we end up crashing here, and it goes down to 9,256. So at each of these points, whenever you see that amount of cash, this is the largest amount we've seen in a while here, you know that it's heading back up, and it did. So if you had bought in at $9,000 or $9,200 or $9,300 and even sold out here, you would have done really well for a position trade. So looking at the market volume, looking at the volume of cash coming in and the cash going out tells you a lot about where it's headed. And when you see that happening, you know it's got to go back up. So there's an indication there. RSI is an indication on its own. I want to talk about something else very quickly before we close this out, and that's divergence. I'm going to do a video on bullish and bearish divergence, but I want to briefly discuss them here as an introduction. They can be pretty powerful. So let me see if I can find one here for you. So basically what a bullish divergence is, where you might see a price decrease, like yeah, let's try this one here. So you see a price decrease. So you have a dip, which dips quite low, and the next test of strength, the next dip is down here. Now there's this one, but it doesn't qualify. But basically, this is the next dip, and you could even go down to here. It doesn't really matter. We'll just do that. That's probably the best one right there. So you have a dip, considerable. It's dipped a number of times, but that's the new low here. Then you test that with the relative strength index. So you go here. Oops, gotta do that again here. And then you go over to the same area. You have the mark. Now, this is powerful because you have a price decrease, which looking at this chart would tell you the price is dropping and it's not strong right now. But the RSI is not telling us that. The relative strength index is actually telling us the opposite. Because even though the price has met a new low, the RSI has not met a new low. In fact, it's gone up. So what you have going on here is the relative strength index is saying, yeah, it may have dropped in price considerably here. That's a fair amount of drop, but it's still strong and it should go back up. And it does. From this point, 12,763, it goes up to 14,157. And that's over a period of half a day. So this is very powerful. Let's see if we can find another one here. Well, let's look at, it's kind of interesting because this is actually the drop that includes the 17th. Let's do this. Let's do this. Hold on here. I gotta get away from the buttons. All right. All right. So there's another example, basically same thing, a little more, quite a bit of a more drop. But again, we know why that was caused. But the RSI is telling us that it should not be there. The price is stronger than where it's at. And when you couple all these things together, you couple the relative strength index and then the divergence, which tells us that even though the price has dropped, the relative strength is not going along with it. And then you add in the fact of the great amount of cash flow coming in. You know that it's going to go back up. It has to go back up unless Bitcoin was shut down or something like that, you know. But it's going to go up. It has to go back up. So it does go back up. In fact, it goes up considerably from about 9,100, 9,200, wherever the last drop was. I think it was 92 something. It goes up to 11,800. And if you had sold out there, you would have made a considerable profit. Now, you could have held on to it, took that dip, and sold here, or you could have sold out here, waited for this dip, bought back in, and sold up here. Now, how would you have known? Well, you follow the charts. Basically, there's a point where they're starting to get some resistance, and right now it's in the middle, or it was in the middle. So it could go either way, but it's testing this point right here. Okay, so it's testing that, and then it's testing up here. So as it goes up, or as a chart falls, it's going to go back up and retest that point. And you'll see this throughout the charts. You'll see, so like here's pretty even, drops the same amount. It goes up considerably, goes up, it drops a little bit, goes up, and then it drops down here to test that point again. So it's testing this point, then it goes up, goes up, goes up, goes up, drops, goes up, and then it drops, and it's retesting this point. So you're going to see that throughout a chart, that it will go up considerably, then it will drop back off, and it will test that point as a strength point. And that's normal. You got to be able to read that in a chart and see that that's what's going on. So alright, this is longer than I was intending for this video. I'm going to close this off, but comment below and let me know what else you want to see explained. If there was other parts of the chart that you wanted to understand better, if something wasn't exactly clear, if you want to hear more about divergence and how they play into day trading, or not day trading, but position trading, just comment and tell me what you want to see. I'm going to do a couple of videos on charts and trading. And the last thing before I close is this. This is very powerful. There's people actually paying for software just to do alerts. Coinigy actually has it built in a very easy way. I actually really like how they do it. So basically, we're testing this point here. So I'm putting an alert for there, and I just confirm alert. And the alert has been made, and as soon as it hits that point, I'm going to be alerted. So I'm going to go through, and I'll go through each of these and set alerts at the point at which I believe would be where the price is going to be tested. And I'll wait. And when the alert goes off, I'll check it, double check to make sure my calculations are accurate, and I'll buy in. And if you do it like that, if you buy in with intelligence and you're buying into things like Bitcoin and Ethereum for position trading that are secure, you can do really well. And I do want to tell you, make it very clear, this is not financial advice. I'm not telling you to invest any money, and you invest at your own risk. Any form of investment in stocks or coins or crypto is a risk. You have to understand that going into it. Only invest what you're able to invest, and start with a very small amount of money and just test it. See if it's something that you want to get into more. Thanks so much for watching, guys. I appreciate it. Please hit the subscribe button so that you're notified as soon as we drop new videos. Hit that bell, and like and comment below and let me know what you want to see as far as trading videos or chart videos or anything along these lines. I will try my best to get a few more of these out soon, and let me know what you thought, if I can explain something a little better for you in the next video. Thanks, and take care.